oil, I see it going down still. And I've noticed that is more fundamental decline than anything else.
Yeah, of course, oil it's affected by fundamentals mostly.
Yes.
So the supply.
See that second last bearish candle. I won't be surprised if the current candle, monthly candle closes bearish still.
Yeah, but I think we need to put into perspective that we are at the extremes. Yeah, of course, $31 oil has gone up a bit. But
yes,
last week we were talking of almost like $15, $19.
That's correct, sir.
Yeah, so now we really need to look at like market which has gone into extreme levels of being oversold. Yeah, such that yes, you need to be careful when trading also shorts. Because remember, we are now at a higher time frame. What demand zones?
Yes.
And you can see already the rejections that are happening there. Even the last bearish candle on the last month's candle, you see how the indecision was. There was indecision.
Yes.
So no one really took control of what? Of the market.
The market.
Yeah. So you really need to be careful when you are trading shorts, because this is the time when most retail traders are gonna be eaten out if they jump into oil.
You see that last bearish candle?
Yeah, the big one.
Yeah.
On a monthly, right?
Followed by that indecision. I can see now there's an evening star that is forming up there, but I'm convinced that at 75% retracement OT of that bearish candle, we're gonna go down again.
So you're looking at about $35 per barrel. That's where you're gonna be looking.
If you look closely, I don't know. Can you see my mouse? Okay, let's look at those 1, 2, 3, 4, 5, 6 bearish candles to the left there by 2014 June.
2014 June. 2014.
That is, yeah. Do you see those about 5 black candles? Those ones.
These guys.
Yes. If you look from, you see where the bottom of that circle. If you draw a trend line on top and throw another trend line on the bottom, you'll see that we're on a channel that was broken further to the downside.
Like that.
Correct, sir. Correct, sir.
I see.
So more of like a drop-based drop.
I see where you're coming from.
Yes. So that demand zone there was engulfed. But then there was a huge rejection there on that market indecision. So I'm convinced that we're still gonna see more prices heading towards the downside before the market corrects itself, as you're saying, that has been oversold.
But now, if you put into perspective this economy reopening, which is going on around the world, it's going to increase the demand. You see?
Yes, sir.
It's going to increase the demand for oil. But already you can see this month already, it has pushed up. You see?
Yes, it has.
Yeah. So with more economies, with more countries easing their lockdown situations, I'm sure we're going to see oil push up a bit.
Okay.
You see, because right now, everyone is now getting back on the road, right?
Yeah, correct.
There's going to be demand. The moment
demand, yeah.
The moment Europe comes back online, the moment the United States comes back online, then you're going to see oil is going to start really closing this liquidity void here. You see? So personally for me, I wouldn't be looking to short oil right now. Reason being
Okay.
that if you look at this is what this is May, April, and then we've got March. March, that's the one with the huge bearish move to the downside, and then we've got February and January. So January, February, March, they were all bearish candles, right?
Correct, sir.
But you see what happened with February. February closed below this bullish order block, this one, and then we saw market retest and clear up the stops that were down here, right? After a clear up of those sell stops that were down here, market then starting to show signs of what? Moving to the upside. So my analysis will be like this on oil. Yes, we've got this price point here at 53,400. Is it 53,400? Let me get the exact price point. What is the close on this candle here? So we've got 53,620. So we're gonna put 53,620. That level there, right? Then we put February into perspective. The close of February, which came in at where's February? Came in close of February came in at 50. That was $50 a barrel. So let me grab this 50, 50, 50. So that was February close. So you see that range there between this bullish order block here, where we had a short move to the upside, then eventually the market came back, crashed through, then closed below, and then we tumbled to the downside. So this range here, the one that I've highlighted, I'll be expecting oil to get back up there. But it's not going to be like with the same speed that it fell, you see?
Yeah.
It's going to be a gradual increase to the upside. See? Because I do expect this level to hold. You see? That level, I'm expecting it to hold now. Yes, we are going to have, what is the close on this last down candle here? So the close is coming in at 26.14. So I'm going to highlight 26.14. That was the close of March. 26.14. Oh, sorry, I marked the wrong one.
26.
Low close 26.141.
26.141.
Yeah, 141. So it came in at 26.141. Oh shit, I'm putting 23. 26. You see that 26.141? Market cleared. Can you see here the low of this candle?
Yes.
Let's see, what is the low? The low comes in at 27.53. So this candle cleared up the stops. This guy cleared up the stops in this last down candle. In our last bullish order block, stops were cleared. Then market kept on enticing people to short, right? Of course, the June contract eventually expired and then market crashed. But can you see when the June contract opened, the May contract crashed. When the June contract opened, market started retracing to the downside. For me, this is a clear indication that already institutional traders, they've finished their job here. You see, there's no way they're going to look back to keep price below 26.14. And if you look at what the fundamentals are saying now, most economies are coming back online, which is going to increase the demand for oil. That means market right now on oil, we are on a 10. Market is turning to the upside, meaning we need to be hunting for longs, right? Short trades, yes, they're going to be ideal, but you really need to be in and out, you see? If you are going to be trading short trades. So now let's go to with those levels marked, let's go to a weekly chart. Right. Can you see now on a weekly chart, the moves to the downside now, they are more reserved. They are no longer like those big, huge moves. You see, there's a gap here. You see that gap? And if you look at this up candle here, right, and this down candle which closed below the bullish order block, this range is would definitely be closed up.
Filled up, yeah.
Yeah. In the coming month or 2 months. You see? Especially if America comes back like full time. The moment Trump says everyone is now back into square one, like their normal thing, then you're gonna see oil start pushing to the upside. You see?
Yeah,
So
Ivan,
yeah.
I wanted to ask also on that pertaining to the fair value and gap. What you see that one is a clean. There's nothing there, which is interlinked to the moves which happened below and this other side. How do we like elaborate the fair value pertaining that gap? That one, it's a clean one.
I don't really understand what you're trying to say. What are you saying?
You see the that gap you just highlighting now.
Yeah, this one.
Yeah. Yes.
Mm-hmm.
What can we say like in relation to explanation, fair value, those gaps
You
which
see,
normally happen?
you see,
Yeah,
when you talk of gaps
yeah,
and liquidity voids, it means there
yeah,
is liquidity there. There's money which was left on the table because of
yeah.
this move which rushed to the downside.
Downside.
You see?
Yeah,
You see, now you have to look at like these highs. You see this high and this high.
yeah,
Probably everyone jumped in, right? They shorted oil. And those people, if they short oil, where are they going to put their stops? Above those highs, right?
yeah,
With the belief that it's going to keep what? It's going to keep crashing.
yeah,
You see? So now, when you look at it from an institutional point of view, you need to look at like, okay, where do the institutions look to move the market to? You see? They only move
yeah.
the market to where there is what? Where there is liquidity.
Okay.
You see? So when you talk of gaps, look at it from a point of liquidity engineering. Like, how are they going to create the money to move this asset from 2614 probably all the way to 50, right? But it's not going to be an instant rush to 50. The only way it can be an instant rush to 50 is if Trump announced immediately that everyone can go back to work. You see? That means
Okay.
all those oil reserves that are stranded in the ocean right now, they're going to start making their way to the shores to empty what they're carrying, right? Because there will be demand now. Demand is going to increase to be like a massive increase in demand.
Yeah,
So it's going to keep pushing to the upside. So now when you look at it from a weekly point of view, you can already see today is what? Today is Tuesday. This is our last down candle, right?
Yes.
yes,
2 weeks ago. That's our last down candle. But still, it's in our monthly uh, bullish order block. You see? So you can see already longs from 2614 have already started
yeah.
paying up since last week. You see? We are on a weekly chart. So now I'm gonna go to a daily chart, and then we can see what's happening there. You see? So you can see on daily charts, now the market is respecting the last down candles. You see? We had this candle here. Market, there was a short retrace to the upside, came back, it respected. Can you see how this candle here, none of the following green ones closed below? They're all just pushing to the upside. This is like what? It's 900 pips.
Ah, sorry.
That's a lot. You see?
That's a lot.
Yeah. Because
So the next black candle that generates, a person can go up now.
you see now, can you see where 2614 is? 2614 is ideal for longs on crude oil. 2614.
No,
So
I
now
see.
it's a matter of waiting for a bit of retracement from those
Yes.
that highs, those the next highs.
Yeah.
When it reaches there, it's gonna make a retracement, I'm sure.
Right. But now, when you look also at the chart, there's something new that has already happened. You see our last down candle. It's this guy, right?
Yes.
This was our last
Yeah.
down candle, which was breached here. You see
Yeah.
that? This candle, the
Yep.
moment it breached there, you see, can you see where the market, the following two candles traded to? They traded to almost mean value of that candle which closed above the last down candle. You see, 50% of this candle which closed above the following two candles. If we go to an hourly chart, then you're gonna see properly that 2614. Can you see these two candles? Let me highlight them. This guy and this guy.
Yes.
See where price touched and then retraced to the upside. 2614.
Yeah.
You see? So now with the current daily candle, the one which is gonna close at 11, you see the current daily candle. Can you see which candle it has broken above? It is broken above this guy. You see?
Yeah.
So this guy, the close was, the open was at what? 26, 29, 15. 29, 15. That was the close. You see 29.15 now.
Yeah.
That's your ideal area to go what? To the upside.
Long.
Yes. Because now you'll be because this is a market 10, 29, 29,115. That's your ideal area now to load long positions to the upside. But now you're gonna have a what? A huge stop loss. So you see, you need market to come down there for you to go and clear up these two highs here. You see, because those are your next area of interest. You see, so you're expecting markets to clear up those highs. The moment we clear up those highs, then you're looking at this level. You get my point now? Huh?
I get it, sir.
Right. So now, if we are to go on a H4 chart, no, while we are there on a daily chart, let's see, while we are still there on the daily chart, let's see, this candle has got what? That's 325. And this other one has got 240. And then this guy has got what? Friday at 247. So you can clearly see that our average daily range, we are ranging at about 250, 280 pips. You see? That's our average daily range on oil. The market either moves close to 280 pips a day. You see? So now what you need to do now, you go to a H4, right? Now we are at 2614, which is our bullish OB, where you look for long. But now we have already highlighted 29,115. So from 29,115, when you're on a H4 chart, 29,115, go to, let's say, let's just give it a round number, 300 pips. So that's 32.17. Let me show you how this is done. 32.17. Just dealing with the rough numbers here, so it's not going to be precise. So we are looking for a range to trade to on oil. You see that range? That's the range that you're dealing with. You see, of which right now you can already see market is already at the extremes of that 200 and what? 80, 300 pips daily range. You see? Meaning that there's going to be a bit of correction to the downside. You see, it can't just keep going up,
all the way up.
Yeah. It doesn't work like that. You see, so 32.17 will be ideal for what? For short trades. Moja, if you want to short oil, the moment you see it at 32.17, then you can probably short it all the way to 29.115.
To 29.115, yeah?
Yeah. If you are to short it. But now, from a H4 perspective, right, the other area which is going to be of interest that you have to look at, say you want to go long. Let me just zoom out a bit. Here. Right, so this is H4. Let me clear up. We've got 26.14, and then market is already up almost above 50% of this entire range here. You see this whole range, market is already up about 50%, over above 50%. So now you need to look at like your clear H4 bearish order block. Right now, market is heading for these highs. You see, when you look at H4, that's where market is heading. But now on H4 time frame, where is our next bearish order block? The clearest bearish order block that you can see on H4 right now. Let me just. Where do you see a clear bearish order block?
What?
A level where price traded to and then dropped. Remember, the board of the candle matters. You see? Where do you see it? If anyone can see it, you can give me a rough price.
Can you zoom out a bit, please? Sir?
You want me to zoom out?
Yeah, make it bigger.
Zoom out or zoom in?
Oh, zoom in, yeah.
If I zoom in now, you're gonna miss it. I've just given you a clue now. You see?
That's what I was saying. Yeah. The
If
one
in
you
now,
see
boss
the
Moja, if I
the
zoom in
eyes,
now,
the eyes. There's two eyes. The way the gap started to your left. Now you zoom it. It's gone now.
Yeah, Tenda is correct. He managed to saw the H4 bearish candle. You see, bearish order block. But now, if I zoom in, it wouldn't have been clear. Can you see it, Moja? It's here. There.
That way, yeah.
Yeah, I see, sir.
Not here, not here. You see, because price
I was looking there. That's where I was looking at.
You see, price wasn't that indecisive to move to the downside. You can see here, yes, there was a rejection here. You see, but you see how price retaliated and moved back to the upside. And then this guy here, this last up candle here, the body is too small. You see?
Yeah.
There wasn't much selling from the institutions in that. So your next bearish order block is this guy, that guy there. You see? So now let's just highlight that guy with so it's this. There. So now if I zoom in, so we are looking for market to go all the way to like roughly above, what is the high on this candle here? The high is coming in at 37, above $37. We're gonna see that price hit soon, $37 per barrel. Because now demand is coming in that much. is no brainer.
After it is retraced, right? Possibly.
Yeah, after a possible retracement to the downside, all the way probably to 26, 29, 115, if I'm not mistaken. Yeah, something. 29, no, I don't know. Yeah, I think it's 29, 115.
915.
But if you are to go long, like where it is currently, that means your stop loss has to be below 29.
It's 21,155.
Not 29.
29,155.
155.
29,115, yeah. 155.
No, yeah.
Yeah. So if you have to go,
155.
yeah, if you have to go long now, your stop loss has to be down there, which is gonna be a bit of a stretch. You see?
Yeah.
That's like almost 300 people, 250 pips. You see now, Boss Moja, why I don't usually play with this kind of assets. That's why.
Yeah, no. Oil and gold, they will flip you up.
Yeah, you see. It's
The same way they will pay you up nice if you get it right.
Yeah.
Moja, you understand those two guys, eh? Gold,
No,
my
I'm
friend.
trying to get there, my brother.
Gold, my friend. Gold. It's a daylight robbery. If you miss it slightly, then you are gone.
But I'm gonna get that. We see oil and gold. I'm gonna be rich from those things.
So
Yeah.
in regards to oil, I would advise that if you're gonna trade oil, try to look for long positions right now, because even the fundamentals they are pointing that side.
What's the long?
Yeah. Try to look at fundamentals very closely. But now, if say for instance you start hearing news about extended lockdown periods or countries that have come out of lockdown going back into lockdown, then you know it's gonna go to the downside. Yeah, it's gonna go to the downside. So now let's look at what is the other one now? GBPCHF. British pound. This is Wilson's pay now. This is not mine. This is Wilson's asset. He like British pound. Okay, so we are already at a higher time frame demand also. Yeah, but
I picked that one because of that.
This was a big stop one to the downside. People here and here were all taken out, even here.
And that side.
Yeah, everyone was taken out of the market. You see? So definitely, if we are looking from it from a monthly point of view, I would probably say we are in a weekly bullish order flow. Markets are looking to go to the upside. Yeah. So now, what is the close on this candle here? The close came in at 119,217.
1921.
That was the close. Let's go to a weekly. There we go, on a weekly chart. So this is our monthly OB. So we are here. This is the one which was breached there, but market didn't stay for long. So this was probably a fake out.
Yeah.
This was a fake out. This was a clear stop one.
So you won't regard that last order block.
Huh?
That last down candle.
The last down candle.
Yes.
Not really.
Very last.
Because that's a clear stop one to me. Because it was eventually, you see, the following week eventually closed above. You need to see a price action like this one. Let me show you much. You need this type of price action. See here.
Yes, sir.
This one just closed all the way above. But can you see what market did? It went higher. Now look at this down candle here. Which order block did it respect? This one.
The one on the...
It respected this guy.
Yeah.
You see? And
this one is that.
If that is a weekly chart now, I wouldn't expect price to come down to this candle, because if it does come down to that candle, that means this whole setup is violated. Then market can go to the downside.
Downside.
Yeah. Because if you see 3 weeks ago, our monthly OB was respected after a clear stop hand. Remember, if he returned Boss Moja, if he returned to a level, he didn't hold, market went higher.
The demand zone.
Yeah.
And return to the, what do you call that, in a secular, return to the demand, like demand area.
You see now, so now we
In a
need
secular
to,
motion. After that V return, you see that down candle which respected the order block.
yeah.
Yeah.
So now you can see already this down candle, where is it coming in? The open was at 1923.2. 1923.2. Yeah, that's where it is. You see, 1923.2. That's your level to look for long positions. The moment we go to a smaller time frame, you can see already. You see this. This was our last down candle now on a daily time frame, which opened at 120.329. The close was at 19.035. So you'll be adjusting this guy to 19.035. 19.035. You see, that's your ideal area now for long positions.
No.
You see, or if you are that person who wants to be aggressive with the market, a 50% mean threshold of an order block also offers better chance to load your position, whether it's on a bullish or a bearish order block. 50% mean threshold, it means market would have traded back 50% of the order block.
Order block.
Then you open your position. You see? Like in this case here, where's my drawing to? You can see already here, market traded all the way to like 50% level of the order block. You can see this. You see, it's almost like 50%. You see? This is basically from a fib point of view. You can already see if I place my fibs from the low of the order block, where's my fib? The low of the order block to the highest high that we reached, which is our swing point. You can already see this candle traded all the way into OTE 70.5 retracement level. You see, which would have been your entry to the upside, because you are expecting what? Long positions. You see? You'll be expecting long positions. So now if you go to a lower time frame, let's go to H4. I think this thing is going to cut now. Now if you go to a H4 time frame, there's our last down candle. The opening is coming in at 1997. The low is at 1978. So if market comes back to 1997, 1.997, then you can look to trade to the upside at this level. You see there's two clean equal highs there. You see these two highs on H4. Yeah, there are two clean. There's a lot of liquidity there. There's a lot of buy stops there. You see, and market is gonna look to clear up that zone. And if you look from a daily time frame, you can see already where the market is going. There, it's going up here, and it's gonna clear up and heading all the way to this bearish OB here. You see, without any indicators, Boss Moja, you can do this thing.
Indicators are the last things.
Without any moving average or anything, you can trade. You see, like from the weekly forecast, Euro USD, dollar index, USD JPY, without any indicators, just by following your levels. You see, because wherever those big guys put in their money, when market comes back there, they will look towards to hold that position. Euro USD, it worked both sides of the market, you see, and it closed that gap. You see this green candle? Remember the gap I was telling you about? This fair value gap, the one I was telling you about on Euro USD. It was on dollar index, but same thing, same setup was on
the
same setup was on I think it's FIBA or something, I don't know. Yeah, I think it's Euro USD, where we had this liquidity void that we talked about. You can see already market rallied all the way. It closed that gap and then came back, crashed back again into the bullish order block. You see, that's where the market is right now. And tomorrow's crude oil inventories that are coming out, I think it's 3:30. They're gonna push the market high. Because if they do clear up this law, then tomorrow's law is gonna hold. Means you have to wait for London session. Make sure you watch London session and then you see the law that comes in. If it does violate today's law, you see? But that's gonna be a stretch. Because if you look at the calendar, there's nothing much coming in. Unless if Trump says something tonight, or I don't know.
Today you went to Arizona, you'll be talking about the PPE.
So yeah, I think that's much about it. The time is almost up now. This thing is gonna shut down anytime. So yeah, for oil boss moja, I would advise long positions, and
no problem, sir.
For British pound, long British pound against Swiss franc, long positions also all the way to what is this here? 122,411. That's a lot of pips from the current level. That's what almost 148 pips. Yo. Yeah. So I think that's much about it, guys. I don't know if there's anyone with a question. This thing is gonna cut.
And gold, say, where are you going with gold briefly?
Yo, gold, I'm also confused right now.
I know that thing is.
I don't wanna lie. I don't wanna lie. Gold is also not showing me clear direct. This kind of price action is confusing. You see, I don't know what it wants to do here. You see,
let's go on a weekly time frame quickly, sir.
It's gonna cut. Let me not disturb my levels here. There.
Yeah, no, just leave it. It's fine.
This is the weekly. It doesn't look like it wants to be bullish. It doesn't look like it wants to be bearish.
It's just there.
It's just there. That's 17.
And it must drop.
That's 17.
It's gonna drop at some point.
I don't.